Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a senior manager here at Schwab, and this is Advanced Charting Techniques. I'll be teaching this webcast series from here going forward. And today we're going to be talking about using a technical tool. It's only been available on Thinkorswim for a few months, but it's called Anchored VWAP. We're going to be talking about how that might be used for the planning and placing of short-term stock trades. So it should be a great discussion. We're going to be buying and selling stocks using a VWAP. I think it's going to be a new indicator to a lot of you, and there are going to be some features of this indicator that can't be found anywhere other than on Thinkorswim. So I think you're going to enjoy the discussion. But before we can get into the particulars of that webcast, let me first of all say hello to everybody that's already chatting in. Great to see everybody out there in YouTube land. Hello, Sharif and Joe, PR451, Kevin, Life in the Fast Lane, Dragon Rider, Scott, Naresh, David, Chris B, Greg, and everybody else. Thanks for joining us week after week. We always appreciate your attendance and your contributions to these discussions. If you are here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the fact, if you're just watching the recording of this presentation, enjoy it. But be aware that you're invited to join us in the live discussion. It does kick off promptly 1 o'clock Eastern Standard Time on Friday afternoons on the Trader Talks channel. So we'd love to have you here live if you'd like to be here. And of course, I'm joined in the live stream here today by my very good friend, Kevin Horner. He's going to be hanging out in the chats. Kevin's role here is he's going to be addressing any questions that I can't get to during the natural flow of the presentation. If they're on-topic questions, but I can't get to them, Kevin's there to pick up my slack. Thanks for being there, Kevin. And Kevin and I would like to issue an invitation to everyone as well. If you're not following us on X, please do. It's a great resource, best place to connect with your favorite presenters in between the live streams. At Kevin Horner CS is where you can find Kevin, or at Cameron May CS is where you can find me on X. So let's get into it. And of course, the first thing that we need to do is consider the risks associated with investing. So bear these important disclosures in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Any investment decision you make in your self-directed account is solely your responsibility. Schwab does not recommend the use of technical analysis as the sole means of investment research, and all investing involves risks, including the risk of loss. All right. So with all that said, let's set the agenda for the day. And as I do, let me get your feedback. How many of you, if you want to chat in here in the live stream, how many of you have used the Anchored VWAP before? I would suspect quite a few have probably heard of VWAP, maybe not so many of Anchored VWAP. Big distinction between the two is Anchored VWAP is actually designed to be used on sort of multi-day charts, whereas a traditional VWAP is usually used for much shorter periods of time. So this is going to be, I think, an important development, a possible new tool for our technical traders in the audience. So first thing that we want to do today is make sure that everybody's familiar with the Anchored VWAP. So we're going to talk about how it's constructed, okay? Just what's the data that goes into the building of the tool. Then we're going to be talking about how it might be used. So how might it generate entry signals for a short-term stock trade? How may it generate exit signals for short-term stock trades? And then finally, we want to make sure that we get plenty of repetition using example charts on Thinkorswim on the Paper Money desktop platform. Okay, so that's our agenda for the day. Let's go right to Thinkorswim. And we'll be hanging out probably mostly in the biggest companies in the S&P 500 for today's example. All right, so let's start with Apple. And let's add the indicator to our chart. Now, this is Kevin. You said that you've heard of this because I did address this topic, I don't know, several months back when the indicator was first added to Thinkorswim. Yeah, that weekend I made sure that we had a webcast to address it. Yep, very good. All right, but I would suspect we've got how many people watching the live stream right now? 115. I'm guessing the vast majority have not seen this indicator before. Okay. So let's add it to our chart. Let's come up here to our little studies icon. And I'm going to just type in VWAP, VWAP, and you'll see there's the traditional VWAP. And here's the Anchored VWAP. So let's add that to our chart. Click Add Selected. And there are some important numbers here as we prepare to add this to a chart. You'll notice there's a -2, there's a 2, and then this is just a code for a date, okay? January 1st of 2020, okay? But let's click apply, and let's click OK. And what we're left here with are 3 lines. Now, right out of the gate, I want to say that if one were to look up anchored VWAP elsewhere, there would only be one line. So Thinkorswim has added a couple of other lines, possibly to add to the depth of the indicator, okay? So our 3 lines are what we call our VWAP, our anchored VWAP line. That's the purple line. And then we have 2 lines, one above and one below, a pink line up here, an orange line down here. Either one of those could generate entry or exit signals, okay? But those are going to look familiar to a lot of you if you use things like Bollinger Bands or maybe a moving average envelope. So the anchored VWAP line, we're going to get into its specific construction in just a couple of minutes here. But I will say the lines above and below, do anybody want to guess what those are? I gave you a little bit of a hint when we were adding that indicator to our chart. I pointed out the -2 and the +2. These are 2 standard deviation lines from our anchored VWAP line. Yep. So what Thinkorswim does, and I haven't found this on any other platform. I've done some significant searching out there, trying to find some other platform that adds that envelope of our standard deviation lines to a chart on the anchored VWAP study. I can't find anybody else that does it. So what these represent are potentially what are quote unquote normal departures from average. And our anchored VWAP line here, its intended purpose, much like a moving average, is to identify, let's say, an average price condition or a trend condition. All right. And when price gets above that, how far might it travel under quote unquote normal circumstances before it snaps back to that trend line indicator? If price departs significantly below our trend line, how far might it get below that before it snaps back up above? Obviously, there's never a guarantee, but for statisticians, for mathematicians, for those sort of harder disciplines, using standard deviations is fairly standard in those fields. So we have 2 standard deviations here. I'm not going to go too far into what 2 standard deviations represent, other than to say, when we apply a standard deviation line 2 units away from a mean or a median, and 2 units above, what we're trying to do is capture 95% of a given data set. In this case, it might mean if we were to draw lines above and below our AVWAP line, how far would those lines have to be drawn to capture 95% of the activity, the price activity? So that means if we get outside of those lines, now we're starting to look at something that's pretty unusual. It only happens 5% of the time. That's the concept there. So that's what the upper and the lower bands represent. So how is this middle band constructed? What is this anchored VWAP or VWAP line? So it takes sort of a 5-step process to calculate this. So we're going to get a little bit deep in the weeds. This is more intended for those that might consider themselves to be sort of the engineers in the audience or the tinkerers who really like to understand how an engine works before they try to drive the car, okay? But the first thing we do is calculate the first candle average. So we calculate the average price of the first candle. Now, by default, you'll notice our 3 lines are converging back here on the first candle of our chart. So if I'm looking at a 1-year chart, the indicator is just going to start on that very first candle, and then it's going to fan out from there. Now, that happens to be July 5th of last year. Is there any significance about July 5th of last year other than it was 365 days back from today? Maybe or maybe not to a technician. But I'll talk about how this indicator might be tailored to what the technician themselves think of as being potentially more significant than just 1 year back. But in any case, by default, we're going to be looking at 1 year ago, and we need to get a quote unquote average price for July 5th of last year. So what is an average price? How is that calculated? Well, it's kind of a simple calculation, at least in my mind it is. The indicator is just going to take the high of that candle, add it to the low of that candle, add in also the close for that day or that candle on this daily chart, and it's just going to divide that by 3. So it's going to take the range of prices from 1 year ago, the closing price from 1 year ago, add them all up, divide by 3. That gives us our average. So this is going to start calculating a day-by-day data set, very much like it's very similar to a moving average, but different in significant ways. A simple moving average, for example, just uses closing values to calculate trends over time. This is actually going to use average values to calculate trend, but then it's also going to build in a volume element. Okay. So again, my apologies if this is a little bit deep in the weeds, but for some of you, you might say, this is nice that this is how it's built. It's interesting to know the algorithm behind the indicator. For my purposes, I don't need it. That's okay. But I still think as an educator, it's my job to sort of explain the whole thing. Kevin says, I have a hard time with a starting point on VWAP. We're going to talk about that, Kevin. Where might we make that starting point if we don't just go with the default of 1 year ago? All right, so we calculate that average price of the first candle, and then we're just going to multiply that by the volume. You multiply that average by the candle volume. Oh my goodness. Let me get my typing correct. There we go. All right, so what that's going to do is it's going to assign a heavier weight to high volume candles, a lesser weight to low volume candles. So there is an average price element to the calculation of this trend line. There's also a volume element. So it's a volume weighted average price, VWAP. All right. So that's step number 2. Step number 3, and yes, you'll see me. Well, actually, let me make one other note regarding this second step. I did type things out in advance. I always like to collect my thoughts before I try to explain these sorts of things, just to make it as concise as possible. But the outcome of these first 2 steps generates something known as the PV. Okay, so the average price times the volume equals something called the PV. Now, somebody out there probably remembers what PV stands for. To me, I tend to think of it as kind of like the period value, the significance of that candle. Okay. I don't know that that's exactly what it means. I'm going to have to go back and remind myself. But in any case, we wind up with something called the PV, and then we take that PV, divide that PV by the total volume since our anchor date. So it's going to calculate the weighted value of today's candle, and then it's going to go back to the start of whenever we anchored our indicator, total up all the volume, divide that weighted value by the volume. Okay, since that by the total volume since that anchor date, and that sort of has a smoothing effect. And then we just sort of start to lather, rinse, repeat. We calculate the next portfolio value, or position value, and then add that position value, add the new PV to the previous PV, and divide by the total volume. There we go. So on and on that process repeats itself. Let me get it all on screen again. So for those of you who want to know, how is this purple line developed? That's it. All of this essentially adds up to a moving average that is similar to, but distinct from, a simple moving average, an exponential moving average, or maybe a double smooth moving average, triangular moving average. Those are all sort of in the same category. And so Thinkorswim just plots this automatically on the chart, starting by default at the start of the chart, and then it adds those standard deviation lines, one standard deviation above, one standard deviation below, and there you go. We now know how our anchored VWAP is calculated. Well, now let's start to talk about how it might be used. And let's just use Apple as our example here. Couple of conceptual entries and exits generated by this indicator. All right. The first one is if we have our trend line, our anchored our VWAP line here, our AVWAP line here, and there's a strong departure downward from that trend. What does that mean? Well, it means that prices have gotten significantly below where they've been on average using that weighted value. While prices are way below, well, while they're falling, for some traders, it might be a hands-off sort of thing. Let's wait for prices to start to rebound. Well, when they fall, how far might they fall before they start that snap back to a more average condition? All right. Hey, Joe, you like that? Is this good stuff? Good. All right. Well, one thing that traders might look for is for price to touch the lower band, that 2 standard deviation, and then to present a white candle. So like we have right here, or like we have right here. And that may be an entry. All right. So an entry off that lower band is sort of buy signal number 1. Now, when might profits be taken if the stock starts to rally? You'll notice here it didn't get an immediate rally. It actually sagged back down, still holding above that 2 standard deviation line before finally starting that rally. Well, whenever the trader enters, if it's down here near that 2 standard deviation line, a very common exit is to just look for a return to quote unquote normal. That's getting back to that anchored VWAP line. So in that case, our trader may have been in here or here, but out when we get back up to that purple VWAP line. So that's one common sort of round trip, short-term stock trade approach. And in this case, it worked out. Does it always work out? No, it doesn't always work out. But let's look at some other examples of that sort of an entry. Here, we didn't quite touch VWAP line. Here, we got a pretty good signal, white candle at the VWAP, at the 2 standard deviation line. And maybe the plan is to exit if we return back up to that anchored VWAP line. So in this case, another successful trade. Here's a third example. Dragon Rider says price times volume equals the market cap at the moment. Okay, so you're having a sidebar discussion. Yeah, if we want to determine the market cap of a company, that's just the number of shares times the price per share. That gives us a market capitalization. Yeah, but in any case, white candle right down here, following a touch on the 2 standard deviation line, and then Apple rallies up to, in this case, a third successful round trip trade. Okay, does not always work out perfectly. Now, however, that brings us to a second potential entry signal. Just like with traditional moving averages, like a simple moving average or an exponential moving average, a crossover of price up and through our moving average may be an entry signal. So how about I put an oval around some of these? So we've had entry signals here. We had one here. We had one here. We had exit signals here. We had one here. And we had one here. But in this case, crossing up and through that AVWAP line may have been a signal to get in if one weren't already in. And if the entry is taken there, where do you think we might plan an exit? Well, the planned exit may be if we rally up and get to that 2nd standard deviation line above the AVWAP line. Yeah. So in this case, we've sort of swapped the psychological underpinnings of this sort of a trade. Down here, we're trading because it looks like the stock is so far, quote unquote, undervalued compared to where it has been recently. In this case, we're looking at getting in at sort of average-ish values and pushing for overpriced extremes, extreme defined by 2 standard deviations above average price. Okay. Now, truth will always prevail says, would you shorten this to a shorter term chart, maybe an intraday chart? Conceptually, it could be, yes. However, I would say you're sort of venturing into the traditional territory of just the normal VWAP. But the anchored VWAP can also be conceptually applied in those shorter term time frames. Yeah. All right, so here our exit might be, one of these couple of days right here, right in that range. Now, a variation on the theme of a crossover of the AV-WAP line. By the way, this back here might be seen as a failed crossover signal for those that were waiting for a cross right here. So I do want to point out, does it always work? Of course it doesn't always work, right? But sometimes a trader might be looking for a price to return to the VWAP line and get a bounce with the objective to get back out at that second standard deviation again. Here we got the entry, but it sort of petered out. May have produced a loss in this case. Okay, but a couple of more signals down here. I think you're getting the point though. So a few possible entry signals bouncing off the lower band or bouncing off the AV-WAP line itself, bouncing or breaking through that AV-WAP line, and a couple of possible exit signals using the AV-WAP line as the exit from the lower band entry, using the upper standard deviation channel as the potential exit for a bounce off, let's say, the AV-WAP line. Okay, there we go. So all of that we've done. Just I hesitated to use this to illustrate this, using it anchored just as the default, because to be fair, I would say most traders are unlikely to just use the default. Instead, they do what, who was it that asked, let's see. Someone asked about, okay, Kevin says, I have a hard time with the starting point on the VWAP. Yeah, traders will commonly tailor where their VWAP starts. So let's talk about how we might tailor this to be a little bit more precise. And I think it's fair. Let's just move on to some other stock symbols. Let's come over here to our watch list of S&P 500 companies. We're looking at the second largest company. Let's look at maybe the largest company out there. So here's Microsoft. Here it is anchored to 1 year ago, and you can see how a trader might be looking for similar entries, using similar exits, and so on. But let me show you how this might be tailored to use some other time frame other than just 12 months. Called an anchored VWAP for a reason, because we can actually select a different anchor point just with a click. Now, there are a couple of different ways that a trader actually, in my experience, there are 4 different ways that a trader might choose to anchor the VWAP or the anchored VWAP in a different way. Number one is to just look for big events. So for example, an earnings announcement is a big event that can kick off price and maybe set the price in a new direction for a significant period of time. Yeah, James says, so let's use the last earnings date or an earnings date. I'll probably use some historical ones and then talk about when a trader might move that anchor. Okay, so how about we go back here to maybe August 24th. There's an earnings announcement. Let's say that we wanted to put our anchor date there. There's August 24th right here. To change our anchor date, all we have to do is right-click on our selected date and set that date to be the anchor point. Do you see where it says set date to, and then it says October 24th of 2023 for the study begin date? Yeah, I'm just going to choose that from the menu. And now you'll notice our lines all start from October 24th, and they fan out from there. And from here, the trader might be looking for just exactly the same sorts of scenarios. Yeah, I think I might have said August. My apologies. That was just a phonetic misstatement. October's what I meant to say. Yeah, so here we start to fan out. We start to get the upper band established. We get the lower band established. Price starts its move. And then it pulls down and gets pretty close. Now, there are some who are sticklers and say close isn't good enough. They want to actually see a touch. That's up to the trader. But we start to see white candles right near that VWAP line. Okay, so we might get a series of entries here with the planned exit up there. Well, that's awesome. If Ambrose is saying, would it not be easier to use support and resistance? Some traders keep it simple, Ambrose. Yeah, support and resistance. A trader can bring their own experience to the chart and just go with that. Others like to automate the process to what extent possible, and they might use something like an indicator like the anchored VWAP. Now, should someone take home the message today that because Cameron talked about anchored VWAP, Cameron was promoting use of the anchored VWAP? No, my job as an educator is to take a tool, show you how it's used, and then I leave it up to the individual investor to determine whether it's going to play a role in their portfolio or not. That's it. I'm an instructor. That's all. Okay. But we now know if we have our entry, the trader might look for an exit up here at the 2 standard deviation line. Well, what if the trade, we haven't talked about these trades when they don't work out. Where might the trader plan to take their exits? Well, a common exit is if we're looking to exit, if we get a 2 standard deviation run to the upside, maybe the trader is willing to risk a 1 standard deviation run to the downside. Okay? Joe says, nice new tool to learn. Yeah. Hope everybody's enjoying it. Obviously, as I mentioned, it's not a sales pitch for this. But let me show you a little customization that's possible for our tool. Okay? Right now we have an entry signal. Let's say that our trader is looking at, maybe this entry signal here, or maybe they were looking at one back here. I don't know, one of these. And the system's automatically generating a potential exit scenario to take profits. Well, what about the scenarios where we are not unprofitable and the stock starts to pull back down again? Well, our lower band can be customized. I'm going to come up here to our study, and I'm going to go to the anchored VWAP gear. Anytime we see a gear on Thinkorswim, that means that something can be customized. In this case, it's the study that we're customizing. And I'm going to take that deviation down, see where it's set to -2. I'm going to change that to -1. And if it's helpful, we can also come down here and we can further customize that lower band. We can change, let's say it's style if we want to. We can change that to like a dashed line. We can change the color to be something like red. Just click OK and click apply. And now what we're seeing here is we get this trailing line that some might keep an eye on. If I have an entry here and I'm watching for price to rise maybe back up to the pink to take profits, well, if it trails off and it goes down to red, maybe it's time to pull the plug on that trade. And what this may do is typically set up a close, not always exactly 2-to-1, but conceptually close to 2-to-1 reward to risk scenario for our traders. Okay, why is it not exactly 2-to-1? Well, that would be the case if we were getting in right on the AVWAP line. Then we would be 2 standard deviations away from an upper band. We would be 1 standard deviation away from the lower band. All right. So customizations can be made there. I'm going to come back here and switch that back. Let's set that back to a -2. It never hurts to get some repetition with the usage of the tools anyway. Let's go back to our lower band. We'll kind of make this back to its typical orange color, set it back to a solid line. So it just looks like what we've been discussing so far. All right. So we've discussed the movement of one anchor point, one reason why we might move the anchor point. Let's also talk about other reasons why we might move the anchor point and also customizations that can be made to plan exits at the lower band. Okay. So somebody chatted in already, hey, we could set our anchor point at earnings announcements. And actually, that was one thing I wanted to discuss. So big news events, or even if we don't know the reason, maybe just a big candle. If we get a big candle day or a big gap up or gap down day, those can signal the start of maybe new trends for a chart. And so those are commonly chosen as anchor points. Now, another common anchor point is just to use a major reversal point. So if price has been going down and then it starts going up, that could be an anchor point. Or if price has been going up and it starts going down, that could be an anchor point. So for example, let's clean up our chart again. Let's right click here, clear the drawing set. And it looks like here, if you notice, price had been moving down, then it started moving up again. So right there may be a significant anchor point. Let's clear off those drawings. And I'm going to right click right here and set the date to, what does that work out to be? January 5th of 2024. There we go. So we just moved to that anchor point. The assumption here being prices started moving in a new direction. Maybe in the future, it'll as things start settling into their quote unquote new normal, we might be able to establish new expected ranges and start to plan trades on that. Okay. For checkout 2 says Cameron is advanced VWAP. It's not advanced VWAP, it's anchored VWAP. So that might be throwing it off. Yeah. Script, you're not able to see it. I think that's probably it. You might just be looking for advanced and it doesn't have the word advanced. If you just look for VWAP, I don't mind doing this again. You'll find it right there. Okay. All right. But moving the anchor point to significant shifts, and obviously those can only be seen in hindsight, right? It's not that we could have known on January 5th that this was a major reversal point. We have to wait to see. So it's going to take maybe a few weeks of patience before we can move to that new anchor point. And beyond that, we wouldn't have a meaningful AVWAP line and standard deviation lines yet if we were to try to position them on day one. We need some time for that indicator to build itself out. Okay, you found it? Good, perfect. All right, but from there, same entries. Bouncing off a VWAP here, we didn't get, I don't think that traders would probably see this as an entry down here. It got close-ish to our 2 standard deviation line to the downside, didn't quite hit that lower band. But these sorts of entries, crossover here, bounce entry here, bounce entry here, bounce entry here. This one took a while to plan, to sort of pan out. Now, those are a couple of different ways or reasons why a trader may choose anchor points. When might they change their anchor point? Well, there is a signal that's commonly interpreted to be a signal that sort of says, Cameron, it's nice that you've been using that anchor point in the past, but it may be time to change it. And that is when price moves either significantly above or below our 2 standard deviation lines. So in this case, you'll notice back here on June 12th, we broke above on Microsoft, broke above that upper standard deviation line on a strong candle. That's a big white candle, and we stayed above there. You know, a day or two of that sort of thing, and a trader might think, maybe it's time to find a new anchor point. So what might the new anchor point be? Same logic, look for maybe a big event like here that's just more recent, or a major reversal point like here. So like here's a big event that also included sort of a reversal point. So maybe we move our new anchor point to right there. Right click, set the date there, and that might be looking for entries, looking for exits from there. All right. So we've talked about the construction of the indicator. We've talked about the application in terms of generating buy and sell signals. We've talked about where we might anchor. We've talked about when to possibly move the anchor. One other thing that I promised that we were going to do is customize the indicator for planning those trades when we get to, let's maybe go back to our Apple example. Okay. And I'm going to go ahead and anchor it right back to the start of the year, just so it's looking like what we started our discussion with. And let's say that we were traders looking at these entries where we're down at our lower band. When might the trader, a bullish trader, say, you know what, oops, it's not working, time to pull a plug? Well, if we're bouncing on a 2 standard deviation line, hoping that we then go back 2 standard deviations to the VWAP line, but it doesn't, maybe one more standard deviation below might be an exit. So here's the customization. This is going to be a little bit different. Let's come up here to our little, studies icon. And I'm going to customize this study. But we're using this -2. That's our signal line. I don't want to take the signal line off. So I'm going to borrow the upper standard deviation line, the up. And I'm going to change that into a down. I'm going to put in a -3. So if our entry is at the second lower standard deviation, an exit to potentially stop out might be at 3 standard deviations down. Does that make sense? I hope it does. Maybe you have to go back and watch the archive and revisit the logic there. But here, let's use that upper band, and let's maybe change its style. Let's change that style to dashed, make its color red. What you'll notice after I've done this is we're still going to have our purple AVWAP line. We're still going to have our orange 2 standard deviation lower band, but we're going to have a new 3 standard deviation lower band that's red and dashed. So let's click OK and click Apply. There we go. Does that make sense? So if we're entering here, hoping to rally up to here, where might the trader take their losses? Right down below. Sharif says when to use VWAP and then when to use the anchored one. VWAP is traditionally for intraday trading, very short-term trades. Anchored VWAP, as a matter of fact, if you try to add the traditional VWAP to a daily chart, it just looks like a line that's not really doing anything. The anchored VWAP is traditionally used on longer time frames, not intraday. Okay? All right. So there we have it. You know, we have the time. Let me do this. If we've customized one of our charts to give us an exit line on entries that are above the VWAP line, and we've customized our study, we've customized a different study to give us an exit line on entries off the 2 standard deviation lower band. But if we could just combine them so they're all on the same chart. Well, here's how we could do that. Let's go up here to our little our beaker icon, and I'm going to bring up VWAP again, anchored VWAP, and I'm going to add it to the chart again. Okay, so we already have this one with the sell signals below our lower band. Let's use this second one. Let's tailor that so it's still giving us the upper band, but with the 1 standard deviation sell signal. That would be our lower band. Let's make that dashed. Let's make that one red. Let's just make sure I did this correctly. Let's click OK, click Apply, click OK again. Yep, there we go. So you can see that we still have, this is one chart where we have our AVWAP line, we have an upper band, and we have a lower band. But we also have a 1 standard deviation exit line here, and we have a 3 standard deviation exit line right there. So this is called advanced charting techniques for a reason. Sometimes we get a little bit more advanced. And could we save this as a favorite study set? Yeah, we come up here to studies. Let's save this study set, and we're just going to call it AVWAP with exits. That's just my example. Okay. There we go. So then we could just, if we wanted to, come over here to our watch list. Somebody's saying, hey, can we look at some other stocks? Yeah, let's come here. Let's pick an anchor point. Where might be an anchor point? A recent anchor point might be here, or it might be back here. Are we on a, yeah. Okay. Maybe we really kicked into gear on NVIDIA right there. Right click, set the date for the study for both. There we go. And hey, there's a bounce off the anchored VWAP right there. Didn't even come close to our exit. In this case, we rallied up to target. Now, do we have to do these customizations? No, we don't. But that's how if we want to have a visual reference point for those 1 standard deviation risk calculations, we have those. All right, guys, we've done some significant heavy lifting here. Maybe it's time for a little bit of a breather. If you need to go back and revisit any of the logic of what we've just discussed, any of the details of what we've just discussed, go and watch the archives for the webcast. Now, this one, it'll take a little while to get it posted. but it should post before too long, barring some technical glitch or hiccup that can happen every once in a while. But yeah, check the archives if you feel the need to go back and revisit something. But also, as I set you loose, just remember that there are some other resources available to you outside of the webcast. First thing that Kevin and I would like you to do is, if you're not following us on X, please do that. It's a great resource. It's where you can go to get sort of my observations on what's developing in the markets when there's not a webcast for me able to talk to you through that sort of a format. But follow Kevin at Kevin Horner CS. It doesn't cost anything. It only takes a click and you're there. You can follow me at Cameron May CS. There's my handle. But then also, if you're not subscribers to our channel, make sure you go down and click on the subscribe button. That also doesn't cost anything, but YouTube is the best place to find the archives for our previous webcasts, where they're organized into playlists by series, by topic, so it's easier to track what's important to you. And then, of course, you can join the live discussions here. Thank you to everybody that has clicked the like button already. I see 152 people watching. 53 have already given the thumbs up. That's always appreciated. It definitely helps our live stream. It helps our webcast find a wider audience. If you click that like button, it pricks the YouTube algorithm to show us to more people, and also it lets us know that we're on the right track. Hey, Kevin, thanks for posting that playlist. That's definitely appreciated. But everybody, yeah, time for me to let you go. We've accomplished what we set out to do today. I wanted to talk about how the Anchored VWAP is constructed, how it might be used, and get to look at some examples on Thinkorswim desktop paper money platform. We did all of those things. So yeah, go enjoy the rest of the webcasts on the calendar today. I'll be back in a few hours. I'm going to be filling in for getting started with stock investing. I'd love to see you then. I'll look for you in a future webcast, including this one next week. But I'll also look for you on next. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.